Why every country wants digital currency. The truth, central bank digital currencies. Freedom or control. Governments are replacing cash. Here's what it means, digital dollar. Coming. What you need to know now? Your government is planning to replace the cash in your wallet with something completely different. Something that would give them unprecedented power over every financial transaction you make. And this isn't a conspiracy theory. This is official policy being implemented by over 100 countries right now. The question is, why are governments suddenly racing to create digital currencies? And what does this really mean for your freedom and privacy? Central bank digital currencies, or CBDCs, are dominating discussions in government financial ministries worldwide. China has already launched its digital yuan. The European Union is developing a digital euro. The United States is researching a digital dollar. India, Brazil, Russia, virtually every major economy is either testing or planning their own version. This represents the biggest transformation in money since we abandoned the gold standard. And yet most people have no idea what's actually happening or why it matters so profoundly. Let's start with what a central bank digital currency actually is, because there's massive confusion about this. A CBDC is not cryptocurrency like Bitcoin, or it's not decentralized, not anonymous, and not outside government control. In fact, it's the complete opposite. A CBDC is digital money issued directly by a nation's central bank, fully controlled by the government, and designed to replace or supplement physical cash. Think of it as digital cash, but with one crucial difference. The government can track every transaction, control who can spend it, where they can spend it, and potentially even freeze or expire it. Now, here's where it gets interesting. Why are governments so obsessed with creating these digital currencies right now? The official explanations talk about financial inclusion, efficiency, and modernization. They say CBDCs will help unbanked populations access financial services, reduce transaction costs, speed up payments, and make the financial system more resilient. And sure, these benefits are real, but they're not the main reason governments are racing to implement this technology. The real reasons are far more significant and, frankly, concerning. Control is the first and most powerful motivator. Physical cash is anonymous. When you hand someone a $20 bill, there's no record of that transaction. The government doesn't know you made it, can't track what you bought, and has no way to stop or reverse it. This anonymity is a feature of cash that governments have tolerated for centuries. But in the digital age, it's increasingly seen as a problem. With CBDCs, every transaction would be recorded, tracked, and monitored in real time. Governments would have complete visibility into the entire economy at a granular level. This level of control enables things that were previously impossible. Imagine the government deciding that your money can only be spent on approved items. No alcohol, no gambling, no purchases from businesses they disapprove of. Imagine your money having an expiration date, forcing you to spend it within a certain time frame or lose it entirely. Imagine the government freezing your digital wallet instantly if you're suspected of any crime, or even if you've expressed political views they don't like. These aren't hypothetical scenarios. China's digital yuan already has programmable features that could enable exactly this kind of control. The second major reason is the war on cash itself. Governments and banks have been trying to eliminate physical cash for years. Why? Because cash is difficult to control, expensive to manage, and enables tax evasion and illegal activities. But there's a more fundamental reason. In a cashless society, negative interest rates become possible. Right now, if a central bank charges negative interest on deposits, people can simply withdraw their money as cash and store it at home. But in a fully digital system with no cash alternative, there's no escape. The central bank can charge you for holding money, effectively forcing you to spend or invest it. This gives governments and central banks unprecedented monetary policy tools. The third reason is financial surveillance and tax enforcement. Tax evasion costs governments hundreds of billions annually. With CBDCs, every transaction is recorded automatically, making it virtually impossible to hide income or avoid taxes. While this might sound beneficial for catching wealthy tax dodgers, it also means the government has complete financial surveillance over every citizen. Your entire economic life becomes an open book to authorities. The fourth motivation is geopolitical. China launched its digital yuan partly to challenge the dominance of the US dollar in international trade. If Chinese trading partners adopt the digital yuan for cross-border transactions, it weakens the dollar's reserve currency status and reduces American financial influence globally. This has triggered a digital currency arms race, with every major power rushing to develop their own CBDC to maintain monetary sovereignty and geopolitical leverage. The fifth reason is the threat from private cryptocurrencies and stable. When Facebook announced its Libra cryptocurrency project, it terrified central banks worldwide. The idea that a private corporation could create a global currency used by billions, effectively replacing government-issued money, represented an existential threat to monetary sovereignty. CBDCs are partially a defensive response, an attempt by governments to offer a digital currency alternative before private companies or decentralized crypto make government money obsolete. Let's examine what's actually happening on the ground. China is leading the world in CBDC implementation. Its digital yuan is already in use across multiple cities, with millions of transactions processed. The system integrates with mobile payment platforms and can be used both online and offline. But here's what's concerning. The digital yuan is designed with built-in surveillance capabilities and programmable restrictions. The Chinese government can track every transaction, and the system allows for social credit score integration, meaning your spending could be restricted based on your behavior and political compliance. The European Central Bank is developing a digital euro with a planned launch potentially by 2020. European officials emphasize privacy protections, but the details reveal significant government surveillance capabilities. Transactions would be traceable to law enforcement, and the system would allow for negative interest rates and programmable money features. The United States is moving more cautiously, but nonetheless seriously exploring a digital dollar. The Federal Reserve has published research papers, conducted technical experiments, and solicited public comment on CBDC design. While the U.S. hasn't committed to launching a CBDC yet, the infrastructure and planning are advancing steadily. American concerns center on privacy, freedom, and the potential for government overreach, creating political resistance that has slowed but not stopped development. India has launched its digital rupee in pilot programs across multiple cities. The Reserve Bank of India is testing both retail and wholesale CBDC applications, aiming to reduce the country's heavy reliance on cash and bring more citizens into the formal financial system. Brazil, Russia, South Korea, Japan, Australia, dozens of countries are at various stages of research, development, or pilot testing. So what are the actual implications for ordinary citizens? The benefits that governments promote are legitimate. CBDCs could reduce payment system costs, enable faster cross-border transactions, provide financial services to unbanked populations, reduce counterfeiting and money laundering, and allow more precise monetary policy implementation. These are real advantages that shouldn't be dismissed. However, the risks and concerns are equally substantial. Privacy erosion is the most immediate concern. With CBDCs, financial privacy essentially disappears. Every purchase, every transaction, every financial interaction becomes data that governments collect and can analyze. Yes, there might be privacy protections built into the system, but they're entirely dependent on government promises and could be weakened or eliminated at any time, especially during emergencies. Government overreach becomes technologically possible in ways that were never feasible with cash. Programmable money means governments could restrict what you can buy, where you can spend money, and even make your money expire. Freezing assets becomes instant and effortless. During protests or political disputes, governments could simply shut off financial access to dissidents or groups they disapprove of. We've already seen previews of this during the Canadian trucker protests, where the government froze bank accounts of protesters and donors without trial. Financial exclusion could worsen despite claims of inclusion. If you're on the wrong side of government algorithms or social credit systems, you could be effectively locked out of the economy entirely. There's no cash alternative if CBDCs replace physical currency completely. Cybersecurity risks become existential. A fully digital currency system represents a single point of failure. A successful cyber attack could paralyze an entire nation's economy instantly. And unlike physical cash, which continues working during power outages or system failures, CBDCs are entirely dependent on functioning digital infrastructure. The death of monetary alternatives is perhaps the most concerning long-term implication. Once physical cash is eliminated and CBDCs become the only option, citizens lose the ability to opt out of the government financial system. This represents a fundamental shift in the power relationship between citizens and governments. So what's the realistic future here? CBDCs are coming. That much is certain. Too many governments are too invested in this transformation to turn back now. The question is what form they'll take and how much freedom and privacy will be preserved in the design. Best case scenario, CBDCs are implemented with strong privacy protections, meaningful oversight, and limitations on government control features. They coexist with physical cash and private payment alternatives, giving citizens choices. Programmable restrictions are prohibited or strictly limited. This outcome requires active citizen engagement and political pressure to ensure rights are protected. Worst case scenario, CBDCs replace cash entirely. Governments implement comprehensive financial surveillance. Programmable money enables social control, and dissent becomes economically punishable. This dystopian outcome becomes more likely if citizens remain passive and uninformed about what's being implemented. The most probable scenario falls somewhere in between. CBDCs will be launched with privacy protections that look good on paper but contain significant loopholes and exceptions. Physical cash will gradually be phased out through inconvenience rather than outright banning. Most citizens will adopt CBDCs for convenience without fully understanding the trade. Governments will expand their surveillance and control capabilities incrementally over time, each step justified by security concerns or emergencies. What should you actually do? First, educate yourself about CBDC proposals in your country. Most governments have published research papers and held public consultations that reveal their actual plans. Second, engage politically. Contact representatives, advocate for privacy protections and meaningful limitations on government control. Third, maintain financial alternatives. Keep some physical cash, consider cryptocurrency for appropriate uses, and don't become entirely dependent on any single payment system. Fourth, stay informed as this technology rolls out. The initial implementation might seem benign, but the capabilities being built into these systems matter enormously for long-term freedom and privacy. Central bank digital currencies represent one of the most significant changes in monetary systems in modern history. They're not inherently evil, but they're not neutral technology either. The power they give governments over citizens' financial lives is unprecedented, and whether that power is used responsibly or abusively depends entirely on design choices being made right now and the vigilance of informed citizens demanding accountability. Do you think central bank digital currencies are a good idea or a threat to freedom? Share your thoughts in the comments. Subscribe to stay informed about how governments are reshaping money itself. Your financial privacy might depend on understanding this transformation.